Welcome to the Investor Coaching Show, a podcast to help you get an insider's view of the financial world and escape common investment traps. We look at the financial news of the day and help you make sense of it so you can relax about money. And here's your host, Paul Winkler.
All right, we're back here on the Investor Coaching Show. Paul Winkler, along with Jim Wood. There was something, Jim, this I thought was interesting about American doctors. And I thought it'd just make an interesting conversation regarding handling of money and unhappiness and those types of things. I was talking about doctors being rich and miserable in America. And a lot of it being, and this whole healthcare debate that's happening right now. Have you been paying much attention to that? What's been going on in the healthcare debate and people talking about how do we fix the system?
A little bit.
I used to sell, oh my gosh, thinking about my past, selling health insurance in the past. And I will never forget, I would go door to door to companies in the Nashville area. And if you owned a company in Nashville, you probably saw my doggone face at your door back in the 90s. But I would walk in and go, hey, can I quote you on your health insurance? And oh, man, I just got to the point where I never met a stranger. And I would walk in these places. And it was kind of, so I could tell you some stories. From back at that point in time.
Well, this is a good place for those.
It is a good day. Oh man, I just remember this one time walking in. I'm talking to this young guy, and he starts telling me a story about his. We were talking about life insurance, we're talking health insurance, and all that stuff. And he's telling me about his friend, and this is an estate planning story. He said to me, he says, "Oh yeah, man. Oh man, I wish I'd met you a couple of years ago." And I said, why? And he said, well, he says, I had this friend and he had life insurance and he could have used some planning, financial planning. And I said, well, what happened? And he says, well, my friend passed away. And I said, oh man, I'm sorry. And he said, yeah, he said he had this life insurance policy. And, I said, was he married? Yes, he was married. And he said, that's the story. And I said, well, what happened? And he says, well, he passed away. And his ex-girlfriend was the beneficiary on the life insurance policy. And I was like, oh, and he says, is there anything that his wife could have done? And I said, not a thing. I said, you have to be super, super conscious of who you choose. Because a lot of people think about probate and they think about estate planning and they don't recognize that a lot of your stuff when you pass away is going to pass to the next generation or pass to the next person based on law. And then that might be a beneficiary. It might be joint ownership of a piece of property. And you don't recognize that happens. And that's exactly what happened with this particular guy. And I could only imagine being his wife. And I don't know if he had kids, but that was it.
Yeah, and the odds of the girlfriend, disclaiming the property
Lord, no.
is probably pretty slim.
Yeah, not going to happen.
Yeah.
Not going to happen. But I would get that. And I walk into businesses, and if I had a dime for every time this happened, nobody'd need to raise money anymore. People would go at me, oh, yeah, I'm glad you came in here today. Man, what's your name, Paul? I said, Paul Winkler. Oh, yeah, I'm glad you came in. I had this idea for a business, and I'm looking at raising some money for it. And I'd be like, oh, okay, I'll see you later. But, this is something. So I would sell, and one of the things that I would find happening is walking into a business. And I remember walking into a company and this guy goes, man, I would love to have your insurance, your health insurance. And he says, here's the deal. He says, my employees, many of them are on TennCare. And even if I paid for half of the premium on the insurance policy that you might sell me for my business, he said it would be more expensive than what these guys are paying for TennCare. And, so the health insurance system has been an issue forever, but this is really hitting doctors pretty hard. And it says, look around the physicians. This is from The Economist, British publication on economic matters. Look around a physician's car park in Dallas, Texas, and the rewards from years of slogging away at training are evident. It looks like a German car dealership. says Scott Yates, a doctor from behind the wheel of his BMW. He reels off the luxury brands that you can see. He says he worries that his peers are still unhappy. We all went to medical school to practice medicine, he says, not to deal with insurance companies, not to fill out paperwork. And so this burden lies at the heart of a confounding statistic. American family doctors are becoming the best paid in the world and also some of the most miserable. Recent international survey of the Commonwealth Fund, a think tank, 11,000 doctors, 43% of American respondents reported feeling burnt out, more than any of the other 9 peer countries polled. And it says Britain, just over a third of general practitioners in bedraggled NHS reported being physically or emotionally exhausted. So it's not just here. It's all over the place.
Yeah.
And
I would just some of the problems are just like, and the doctors too, they feel that way because they especially in some of these corporate structures, they have, you have to spend X amount of time with a patient and no more, and you have to follow these protocols. It doesn't matter what conclusion you come to. If this client's labs don't fall within, or if they fall within this level, then you can't do anything. And so they're handcuffed a lot, and they don't get to practice real medicine a lot of the times too.
No question about it. And my point on this particular segment right here, let me just make this point right here, is I've run into people all the time, younger people. If you're in your 30s, your 40s, your 50s, something like that, there are people I'll run into and I'll talk to them about retirement planning and they'll say, you know what? I can't ever imagine myself retiring. I just love what I do. I enjoy myself every single day that I go into work and blah, blah, blah. And they'll say, I just love it. I just love it. And I always say to them, recognize that there'll come a day, possibly, that you can't stand what you do, or you can't do what you do anymore. You won't be able to do it anymore. And this often happens with people, they'll come in and say, man, I used to love my job. I used to love my job. And I go, what happened? Well, younger generation came in and now management has changed.
That happens a lot. I hear that a lot.
Do you hear that?
Yeah. The new boss or, things,
and it's a different deal.
Company gets bought and everything's, completely.
Oh, yeah.
Or the workload doubles, like, they'll fire half the people and then you have to do somebody else's job and yours, lots of different stuff.
And you get aged out of the workplace, even though it's illegal to have age discrimination.
Yeah.
They figure out some other reason that you can't be around there. So I was telling people, prepare. Get yourself to a position that you can work because you want to, but not because you have to. And every 7 to 8 years, typically based on history, that you wait to start preparing for retirement, you cut your retirement in half every 7 to 8 years that you wait. And that is based on the statistics on time value of money and the doubling of money in retirement.
You put yourself in a position to have choices. That's kind of how I always explain this. You might want to keep working. You might not. You might want to change careers. But if you don't save along the way, if you don't put yourself in that position, then you're stuck and you have to do whatever it takes to keep the lights on.
Yeah, live on less than you earn so that at some point you don't have to work if you don't want to. That's the idea. Hey, just a note to you podcast folks, we just came out with a retirement income guide and I'm super excited about this. There are all kinds of myths about taking income in retirement. People worry about running out of money, and rightfully so, because a lot of these myths can actually cause that. Now, the myths that you typically hear about, number one, dividends, living off dividends in retirement. Real estate, life insurance as a retirement investment, and annuities and interest-bearing accounts and target date funds. There are all kinds of things out there. What I want to do is put something together that walks through why those things are problematic, number one. Number two, the other thing that I wanted to do is walk through the evidence-based research on taking income in retirement. And we got a ton of data going all the way back to 1900. What's the logic behind it? And it's intensely logical. So we put that together, and all you have to do to download that, making it super simple, just go to paulwinkler.com/relax, and you can actually get into that very easily right there. So I would urge you to do that. Check it out, because I think you're going to really like it. paulwinkler.com/relax. All right, we're back here on the Investor Coaching Show. Paul Winkler along with Jim Wood. I saw something Jim, I was watching, I don't remember where, maybe it was, I don't know, one of the not a finance, it was one of the news channels. And it was I think it was a story on Robinhood. We've been talking a little bit about them recently on here. And a lot of people's, trading using Robinhood. And,
Not the guy in a green suit with a feathered cap?
No. The fund or the investment manager, trading platform, so on and so forth. And,
gotcha.
Just.
Sure.
And those of you that don't know, he was just joking. But it was, I didn't realize that they had, there's like investment management platforms. And I was looking at how much they manage, and I was shocked. It was a very high number of amount of assets that they actually manage over there.
Like a robo-advisor type of thing?
Sort of, kind of. Yeah, they have asset management, and they have professional managers. I forgot how they said professional investment managers or something like managing the portfolios. And I said, well, gee, I'm going to go look at, what they're, because I had seen there was an article from Evidence-Based Investor. There was an article, and it was about why most Robinhood traders earn lousy returns. And I've talked about this article before here on the show. And it was they were drawing on some prior research. Barber, Odine, Huang, and Schwartz, when buying stocks, investors with accounts at Robinhood are more likely to be influenced both individually and as a group by limited attention other than other investors for several reasons. And they talk a lot about why it's problematic. But I hadn't heard a whole lot about the investment management. So I pulled up the ADV, and this is something you do. If you're looking at investment management of a portfolio, go to the ADV. The government requires, when you're a Securities Exchange Commission registered investment advisor, you have to tell the public how you're managing portfolios. And I'm going to give you an example of what you want to watch out for when you're reading these ADVs. So they have section 8 of their ADV. It says methods of analysis, investment strategies, and it says Robinhood strategies have developed a comprehensive approach to creating and managing a range of portfolios, blah, blah, blah. And they said the investment team deploys proprietary factors to analyze individual stocks. Now, right there, red flag. Stock picking, when used by all these pension plans and investment managers, tends to lead to lower returns and greater risk.
Yeah, and it's wrapped up in a little mystery too with it's proprietary.
Oh, true. Yeah, that does sound really, really good. So what we're going to do is we're going to engage in trying to, they talk about commodities in here, alternative assets, another red flag. Real estate, when I have an investment portfolio, I have plenty of access to real estate. I don't need to hold it separately. And then they put my magic word in there, crypto. Is also in here. The investment team utilizes long-term historical returns, correlation, security analysis to develop security analysis. There you go. Analyzing securities. For what reason? To try to figure out what is selling for less than what it's truly worth, or what is selling for more than what it's truly worth. So you're looking at universe of stocks based on objective measures, quality, growth, value, income, momentum. Again, stock picking, market timing language. Using metrics like low debt, variability, quarterly earnings, growth stocks. And this is what you see quite often with management of investment portfolios, is engaging in these types of quantitative processes. That's what they're calling it here. They're using a quantitative process for determining which companies to invest in. Looking at macro considerations. In other words, looking at the entire economy and saying, who's going to do well based on these economic conditions? Well, recognize that when they're doing this, they're only accessing information that everybody's got. Everybody knows what the interest rates are. Everybody knows what's going on in Russia versus Ukraine right now. Everybody knows what's happening in China. We all hear the news. There isn't anything that they have access to that everybody doesn't have access to.
It's always just trying to sell the same thing that doesn't work in a different box. It's something that people have talked about and said, this is what we do. You can read ADVs like this. You can see mutual fund prospectuses, and they all have similar language as we're going to do something that's been academically discredited and isn't likely to work. But other than that, it's great.
Yeah, and that's exactly right. So none of us, and I like what Charles Ellis says, none of us is smart enough to know what's going to happen.
Even the most wonderful companies come and go. None of us would have known 20 years ago that AT&T would get into difficulty, or that Lucent, a derivative, would have real trouble, including the wonderfully talented people who are working at that company at senior levels.
You don't know. Don't try.
Hey, this is Paul Winkler. Hope you enjoyed today's edition of the Investor Coaching Show. If you want to learn more about what we do, go to our website, paulwinkler.com. Until next time, I'm Paul Winkler, reminding you that I believe that more educated investors are more confident investors, and confident investors are more successful investors. Have a great one. Advisory services offered through Paul Winkler, Inc., an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Paul Winkler, Inc. does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.